So the biggest news that probably came out in the last couple of days was the SBA actually released guidance on the PPP loan forgiveness, and it's an 11-page document. It looks really simple to fill out, but there's supporting schedule after supporting schedule behind it. There's some really good things. If you've been working with your contact at SKC and using our loan forgiveness calculator, there's a lot of confirmation in the numbers and the calculations that we've been using, so we were happy to see that. There are some new things that did come out of it, and the first is what they're calling an alternative payroll covered period. So we were all always working on this 8-week period from the day that you got funded, 8 weeks after that, or 56 days after that. What they're now saying is that you can select to use an alternative payroll covered period, which basically just means that if you got funded on April 26th, but your next payroll was going to go on April 30th, you can actually move your start date of that 8-week period to when your next payroll period was due to be run. So it's a little bit more of an extension for people who maybe are every 2-week payers for payroll. So that was a new addition. For anybody that got $2 million or more in principal on their loan, they are going to be subject to some sort of review before the forgiveness is granted. That was a big controversy that came out with a lot of headlines and negative publicity that the SBA got when these really large companies were getting these really big loans, and it caused the SBA to come out with guidance that made all small business owners hold their breath and pause, because they started to kind of bully us into thinking that we needed to give the money back for various reasons. And they had set a May 14th date of anybody to give the money back who felt that they shouldn't have gotten it in the first place. So they have now since come out, the SBA, saying that anybody who has a loan under $2 million is free and clear under their safe harbor for keeping that money, and it's loans that are over $2 million that are going to be looked at with a little bit more scrutiny. One of the other things that was a pro that came out of this new guidance is we had been taking the unknown stance of whether or not, if you didn't hit the 75% of the payroll number that you needed to hit, 75% of your loan balance, we were unsure of whether or not anything was going to be forgiven. But the good news is that the guidance that came out, even if you don't hit that 75%, say you have 60% of your loan balance that goes towards payroll, that 60% will be forgiven. So it's not an all or nothing scenario, which is another pro that could have potentially gone a different way. One other thing for owners who have included themselves in the PPP calculation as well as the forgiveness piece, the $15,385 is the $100,000 over a year for that 8-week period. We've been talking about that for quite some time. But what the new guidance came out with is, as a business owner, whether you're self-employed, whether you're a W-2 employee on your company, or whether you're a general partner getting a guaranteed payment, you can't take the full $15,385 if in 2019 you didn't make at least $100,000. So if you made less than that in 2019, you need to use that as your calculation, divide it by 52, times it by 8, and that's how you will get that amount for the owners of the organization in the PPP forgiveness calculation. Originally, I thought that was only going to apply to Schedule C individuals, but they came out in their guidance saying that that applies to all business owners regardless of entity type. Andrea, what am I missing on the highlights that we talked about before I get into some questions?
I think that's it. I think, oh, just the last thing about the safe harbor. So if employees voluntarily left, or if they were fired for cause or retired, the reduction in your FTE will not count against you. You'll not be penalized.
Right, and that was a concern a lot of people had. But we also had talked about this in previous sessions about if you couldn't get employees to come back who maybe you had furloughed or laid off, if you can document that you opened their job back up and they didn't return to work, that does not count against you either in the FTE, similar to what Andrea said, with anybody who may have just left because of cause or just decided that they wanted to have a reduction in their hours and approached you. Also on the guidance that the SBA came out with is documents that we are required to submit with the loan forgiveness application. So most of it is fairly self-explanatory, similar to on the front end when we applied for these loans. A lot of it is payroll reports, heavily on the quarterly reports, and then the payroll report run for the period post-loan. So that's going to cover you on dollar amount of payroll as well as the FTE calculation part that's on here. The interesting piece about non-payroll costs, and we always thought that this was going to be a possibility, they do actually want you to submit a copy of your lease. So if you're a renter, you will have to submit a copy of your lease to the bank, who will then share it with the SBA. And that lease has to have been in existence prior to February 15th, 2020. With utility payments, they're talking about looking at invoices as well as canceled checks. So they're going to want both of those things. If you don't have canceled checks because maybe it's an ACH out of your banking account, you will need to provide bank statements verifying that that money went out to pay those specific invoices. They also suggest that you keep a host of other different supporting documentation to get to these calculations to fill out on the application. And of course, they recommend that you keep all of these documents for 6 years because they reserve the right to come back and ask any questions, look at any documents, and dig into anything deeper than stamping yes or no. One of the common questions that I've gotten the last couple of days is, how soon can I apply for this? The fact of the matter is, you're not going to have the documentation until your 8-week period is over. So the earliest that you can start to fill this information out and submit it to the bank is, after you've reached the end of that 8-week period, at which time the SBA and the bank that you're applying for have 60 days to either approve or deny your forgiveness calculation. So that is sort of the timeline that we're looking at. With that, I will pause for just a minute. And Andrea, go ahead. I know you unmuted yourself.
Well, and the other aspect is not only after your 8-week period, but 2 of the safe harbors, one is bringing back your employees and the other is restoring them to full salary. You actually have until June 30th to make those adjustments so that you don't have to include the 2 calculations. So the safe harbor may actually extend beyond your 8 weeks for employee headcount and restoring salary levels.
Right. If you've cut individual people or hours, on your team, then you will have to wait until after that June 30th mark, because they ask for payroll records that encompass the June 30th time period, which will then support that you've reinstituted all of your FTEs or that you've reinstituted everyone back up to full salary or full 40 hours. Good point. So with that, I will see if anybody on the call has questions. Otherwise, I will pivot to some of the pre-sent in questions at registration prior to this. Okay. Our first question that came in was, I had laid off an employee who I did not want to hire back. Can I hire someone else to go towards my headcount for PPP forgiveness? So the answer to that is yes and no. So yes, you can hire somebody to replace that person, and that will be included in your forgiveness calculation. But if you don't need to replace that position and that person was fired for cause, then that won't count against you. And that's something that just came out with the new guidance that came out over the weekend. So if you do need to bring someone in to cover that position, it does not have to be the same employee that was in that position prior to your PPP funding. We are interested in any new info on loan forgiveness of PPP as well as tax planning going forward. So this is good. I'll touch briefly on the tax side, and then Andrea, you can jump in if you have anything. To reiterate, currently the expenses that are paid with money that is forgiven are not tax deductible. So when the legislation was originally written, it specifically said there will be no forgiveness of debt income for any of the balance of the loan that is forgiven. However, on the flip side of that, the IRS has come out and said, okay, yeah, that's accurate, that's true, but we're going to call it that the expenses that you paid with this forgiven free money are not eligible to be deducted against your gross income for your taxable income for the year. So that is a huge tax planning situation that we need to be monitoring consistently and saving cash for as we move through the rest of 2020. So Andrea, I don't know if you want to add or highlight anything based on that. I'm hopeful that'll change. There's a lot of senators in government that want to change that because they think that it's not in the spirit of what the bill was supposed to support. The AICPA, which is our national CPA organization, is also a proponent of getting rid of that. But the IRS has come out for now and said that those expenses are not deductible.
Yeah, I think that pretty much sums it up. Besides planning around those tax payments and the cash flow associated with the additional income that will arise, we're hopeful, but for now we're going to plan accordingly with the information that we have.
Right, so people who are in receipt of larger loans or even smaller loans and you realize you're going to be forgiven for a good portion of those loans, we need to start strategizing as soon as possible about what would potentially be your tax consequences for that. Next question, if the full 75% for the payroll is not met, do we receive forgiveness on payroll paid and still the other 25%? So that was what was really good news that came out with the new guidance from the SBA over the weekend. If you don't hit that 75% mark, which is 75% of your total loan going towards payroll costs, you still will be forgiven for whatever amount of payroll that you get to. So let's say you get to 60% of your loan value towards the acceptable payroll costs. That 60% is still counted towards your forgiveness calculation in total. How that interplays with the other 25% of rent, mortgage, or utilities, if you're forgiven for 60% of your loan, because that's the amount of payroll costs that you were able to get, you can only utilize 25% of the 60% for non-payroll costs. So there's a good chance that a good portion of your full loan balance will have to get turned out into a loan, because if you can't get to that 75% mark, automatically your reduction on the non-payroll 25% happens.